Hello traders, welcome to our 7-part video series. Today is going to be the 5th part out of the 7 on the 7 steps for strategy construction. So today we're going to be looking at the T component. Now what is all that about and what is it going to be and how can that help you in your trading strategy and your systems? We're going to be exploring this and more on this live trading session video. Hi traders, thank you for joining the Master the Markets team in our live trading session video and the 7-part video series on strategy construction today, and supporting us in our mission to spread the truth of trading and help you achieve consistent trading performance. It is Thirunapan here, founder of Master the Markets Elite Trades Conference and the Traders Open Day. So what is this T component all about, traders? So I'm just going to get my marker pen just ready out here a bit. I think it's playing a little bit funny. I'm just going to sort that out very quickly. Just bear with me just a little bit. And just in 1-2 seconds, I think we will get that sorted. And then it'll be good to go. But think about it. I mean, in the previous videos, we looked at all the previous components, right? All the 3 components before this. So this is the 4th one out of the 5th. Okay, this is the 4th component. Now, what is this T component all about? Now, the T component is what we call, as in this image over here, is called the target component of your whole strategy. Okay, now how do we look at this in detail? Now, before we go in even into the rules, you first have to think about CO. This is what I mentioned in the previous video as well. Now, what does the CO mean? The CO traders basically means that it is the concept and objective, right? Concept and objective. Now, for some of you might be thinking, okay, what is all this? You just joined, you just joined the middle on the 5th part of the 7-part video series. Don't worry. What you can do also is that you can always head over to our TradingView channel later on, right? And you can take a look at all our videos over there. Let me just show you over here. So for example, all over here on Master the Markets 2010, you can follow us over here. And over here under streams, right? Under streams, not under ideas, but under streams here, you can check all the previous ones that we have done in the 7-part video series for strategy construction. Okay, so you can go on to part 1 and then carry on to part 2, 3, 4. Before that, we've also done another type of video series, another 7-part video series called the consistent trading performance. It's denoted with a different image, as you can see over here. So you can start looking at that. It's really, really good, and it will all combine together with what we're going to go through today. Okay, so that's for those who have not followed us. You can always go and follow us on Master the Markets 2010 and watch through these really quality videos that we've put together over our 12 years of collated research and 38 years of cumulative team experience. So coming back onto the presentation again. So think CO, I'll come back to this, right? Think of concept and objective of strategy, the high level picture, align the target rules according to that in your strategy construction. Now, the next part is that when you think about targets, right, there's 2 subsections in your crib sheet that you do need to put into. So I'll go through them, right? So the 2 subsections that you do need to take a look at. Now, before I come on to that, if I go back onto the charts over here, traders, yeah? So if you take a look at any of the charts, let's say you're taking a look at the S&P or whatsoever, and we did a video on the Monday as well on the update for the whole week ahead, and along the days we are updating it as what we are seeing. But here at the moment, this is an uptrend phase 2 on the S&P. Most important thing, traders, upon point of entry, right? This is what we teach all our clients since we're going on since 2010. Point of entry, upon point of entry, very important to know where is your exit going to be. As part of the exit, that is your target rules. Okay, that is your target rules. All right, which is what we're going to go through right now. Now, there's another type of exit rules which I'm also going to go through later on as well. Now, coming back, and then I'll tie it back into the charts, and then we'll take a look at everything else as well. Now, let me just go back to here. And of course, if you guys got any questions, just type into the chat box as well. Or as you usually do, sometimes you WhatsApp us or email us as well. Right. So there's two subsections are. One is the pre-trade rules. That means before you get into the trade, before you even enter on your point of entry, what is your target going to be? Okay, are you going to place it for, usually people teach you 2 to 1, 3 to 1. We don't actually really believe in that because there's not really much sense in it, right? Because anybody can make that up, isn't it? 10 to 1 and all of that, right? These are all called expected reward to risk ratios, which we talked about in our previous video series, 7 steps to consistent trading performance. So then you may ask, okay, Tiru, if we don't put in expected reward to risk, what should we put this on? The pre-trade rules, right? This should be based on some statistical based parameter, which I'll go through in a bit, in a moment. But whatever it is, the concept is that pre-trade rules, before you enter into the trade, have those target rules already listed out. The other thing is intra-trade. When you're in the trade, how are you going to come out? How are you going to exit is what we're going to talk about. So for example, if you began with saying your target is going to be here, right? But along the way, as you got there, it did a big, massive seller bar. Does that mean that you're going to exit on that day? But of course, it's not out of panic. But what is the intellectual, logical reason? What is it backed up by? All these things you have to think about, traders. Yeah. So this is what we mean by intra-trade rules. That actually brings me to saying that in your exit rules, right? One part of it is your target rules, okay, which is also part of your pre-trade before you enter the trade. What are your target rules? Are you going to place any trade target or not? The other one type of exit is what live exits, manual exits are you going to intervene? In which scenarios are you going to intervene to exit the trade in real time? That is another thing that you're going to be looking at. Okay. Another way that you can get exited as well is when it hits your stop loss. And your stop loss can be either your initial stop loss or your trailing stop loss, which you have already written in the previous component where we talked about the S component, remember, which is what we talked about, okay, which is also within our um, streams over here, as you can see over here, the S component, isn't it? Yeah, this one here on the part 4 out of 7 under our channel Master the Markets 2010. 2010 because we're going on since 2010. Now coming back to here again, so let's take a look over here. So the two subsections, right? So remember that the two subsections that you're going to be taking a look at. The other thing then, traders, is that you have to also think about in terms of the T component, the target component, how you're going to write the rules in terms of the 3 different types of target. Okay, what do I mean by that? Okay, let's look through this, right? The 3 types of target. The 3 types of target are, is very similar to the stop loss things we talked about. One is called time, right? Time-based target. Time-based. Are you going to come out of the trade? Are you going to base a target after 2-3 days being in the trade? When are you going to place that target? That is one. Is it going to be based on time? And is even your exit going to be based on time as well? Okay, those are the things you need to think about. The next type of target or exit you need to think about is money based target. Okay, are you going to get out, let's say, when it hits the $1,000 mark or $2,000 mark, when you make £2,000, $2,000, $5,000, are you going to come out of the trade when it hits your money amount? The other type of target or exit is what we call very, very popular, which is the technical type of target, right? So the very popular ones are when it hits your Fibonacci extension levels, or whether it hit, when the stochastic turns, or whether it is going to be based on horizontal support and resistance lines. What is it going to be for you traders? Yeah. So those are the 3 types of target. How we think about it in Master the Markets is a combination of them. One is we think about time, but other than that, we do think quite a bit of technical, but the technical way we look at it is a bit different. We think in terms of what we call OE, which is called open equity. Now, what do I mean by that? Open equity basically means upon point of entry, how much move is left. How much move is left? We know that on a probability statistical manner, which I'm going to show you in just a little bit minute or so. The reason why we think in terms of open equity traders is because we were trained by institutional quant traders, okay, for more than over 10-15 years now. And in fact, the guy who developed this, which I'm going to show you in a minute, the smart money framework, was back in the 1960s, very similar time to Richard Wyckoff and the volume spread analysis methodology. And that is why we work with a trade guided team on this complementary methodologies coming together, price and volume, right? So now, for those of you thinking, okay, what is OE and all that, I want to know much more on it. As I mentioned before, go on to our Master of the Markets 2010 channel. You can go on to our streams, and over here, traders, you can go and take a look at this part here, right? This is a different video series called Consistent Trading Performance, Part 3. That is the open equity. I highly recommend you guys to watch all this videos, high quality content that we give over here at Master the Markets that you won't see anywhere else because it's institutional quant material. So traders, so coming back to here, open equity basically means open profit, or think how much move is left upon point of entry. Very important on a probability statistical manner. Right, now the next thing is then you then got to think about whatever rules that you choose, traders, it's got to be stats validated as much as possible. This will increase your conviction, your intellectual conviction on this entire methodology that you put together. In fact, let me show you this as well. When we actually design our strategies and everything, and we trade our strategies, we actually go very transparent, right? We show all our profits, all our losses, every single thing is actually in real time. We show it. So you can see over here, I'll show it to you before I go on to talk about the probability stats as well. 2022, we ended up with 73.34%. Now, as a professional, we never look at the profits, at the end profits. We look at the drawdowns. This was a very easy year for the three strategies. Now, these are all not just numbers just typed into a spreadsheet. Every single tab over here that you can see, we got every single trade logged in by our trading team and published in real time and released to our paid members as well. As an educational perspective, over here, all the wins and losses, everything is there. On the TSL primary second strategy also, everything is there. You see, all the wins, all the losses, every single thing is recorded. And that's how we made those profits in 2022, right? We've been going on since 2012. We've been publishing this since 2012, okay? Ever since we started in 2010. Now, in 2023, however, if you look at this, right, we were not actually getting that smooth a ride, okay? We're not getting that smooth ride over there. Now, let me just go on to here for a minute. And let me see. Now, view, switch windows. If I go to 2023 over here, then if you take a look over here, right, traders, over here in this case, the first 5 months, if you look, right, were all drawdowns on these three strategies, right? 2023. Again, the same thing. We don't hide everything. Everything is in trade by trade breakdown, every win, every loss, right? TSL primary, same strategies, right? Everything in real time. But you see, if you take a look, right, but we never shied away. We took 5 months of drawdown. Not everybody will be able to do that. 5 months of drawdown, then eventually June and July, we came out of it with big monster gains. Now, what gives us the conviction is what we are teaching you here. We follow a three-step methodology before we share any of the educational material. First is research. After the research, then we trade it to see what works. Then after that, we share it on our educational platform. Okay, traders. So, and that's what you see over here to show people that, it works in real time, to give the conviction, because this is what we would have liked in the beginning, transparency. As a professional, these things are going to happen just like in any business. You're going to have the losses and everything. But the thing is not to say, oh, it's losses and then give up. Is to question it and say, what is causing those losses? Why is it not matching to my past year performances and my backtesting? What is something that I do need to tweak eventually to make the strategies continue to work? Okay, that is what Ray Dalio always asks, isn't it? The biggest hedge fund billionaire trader. He says, what you must continuously ask, why must your strategies continue to work? Okay, so that is how we are publishing this. This is what gives us the confidence. And finally, so far for July, for this year so far, we are up 8.03%. Okay, and that is all based on this methodology and components where we develop our strategies on. Now, coming back, let me just go back to the trading view charts once again, traders. So over here, right, now let me just show you some of the stuff over here on weekly. Let me just take the Dow Jones over here, right? Now, what is all the stats validator parameters I'm talking about? So over here, we got a stats table. What I talked about is point of entry, is it not, traders? Yeah, point of entry is where this confirmation, we call this dot, the confirmation bar, when it confirms this bottom. So every time there's always a point where there's a potential bottom which becomes a confirmed bottom according to our quantification. You can always quantify in whatever way that you want as well. Now, once the confirmation bar comes, we choose. We don't enter on every dot. We select the dots that we want to enter based on all the knowledge you have learned based on time frame correlation, trends, Fibonacci, stochastic, whatever it may be, right? So you choose that, you select those dots, and upon point of entry, you want to know what's the probability for that target to be hit, for the distance for it to run. And that's where this table will help. This is called the open equity table, right? This is what we call the open equity table. All it tells me is from the point that this bar is confirmed, right? So if I were to do, let's say if I were to hide that, that's the volume indicator that we got as well. Let me just hide all of that for a minute so it becomes a bit more clearer. And yeah, let me just do that as well. And let me do that as well. And this one here, that's the symbol, isn't it? Let me just quickly go on to here. On the symbol, let me just get out this last line as well. So over here, so it's a bit more clearer now. So on this point of entry here, on the close of this bar, right? And if I were to hide that, let's see if I hide that part over there. So let me just hide all of that. So if I were to close that, I should have done the replay, but sometimes TradingView doesn't like the replay mode. So if I did that close, from here, what's the probability of it to go into any of the levels? This is what this open equity table will help me with. It tells me here that to get to 200 points on the weekly time frame, we can do this on any time frame. To get to 200 points, it will do 89.74% chance. There's an 89.74% chance that it will get to the 200 points mark from this point here. So from the close of that bar, which is 33328 plus 200, that is 33528. That means to get to 33528, which is about here, let me just expand that, about 33528, 200 points from there, is just a 90% probability. And as we go along the table, like everything else, there's only a few runners, the drop-off rate will be there. As in any runner running a race, 50% of them will get to 800 points. 50% of them will get to 800 points. So that is what? A 4,100, isn't it, right? 34,100, which is about here, right? So to get to this point, 34,100, from this point onwards, right? According to this table, it's a 51% chance of all the dots, okay, on the research on all the dots over here, which is of 39 dots. But of course, if you improve and select it, then the probability gets more. Maybe you can push 70% of them getting to 800 points. Now, for some of you, this is a little bit above the head or whatever. As I said before, you only need to understand is this tells you probability stats of where it needs to go, how much move is left, and that's what we as traders need to think probabilities. Another thing is, as I said, go to our channel, start to watch this one here, 7 steps to achieve consistent trading performance, which will talk about the OE in much more detail. I highly recommend you guys to start from part 1. Those of you who watched it, then carry on to doing the strategy construction video series under the streams, under the Master the Markets channel. Okay, so that's how we are using stats validated parameters. Okay, this gives us a much more confident traders when we take a trade and then we are placing our target points, and that is what gives us the conviction to publish such results on a cumulative basis. We just don't talk about what happened last week or last month, last 2 months. No, we show you in cumulative, and not many people can do that, and that's why our clients follow us for over 10 years, right? So that's what should give you the conviction when you think in terms of probabilities and stats validated parameters. Okay, traders, the final thing what I want to tell you is, if you think about all of that and everything, is that finally when you incorporate this all into your strategy, okay, you should, as I said, think in terms of probability, but the main question you should be asking is, does the lawn work? Does the lawn work, right? What do I mean by that? Some of you may be asking, true, what do you mean? For example, if I go back to the trading view charts again over here, if you take a look over here, right, if I go back to, the Dow Jones over here, if you take a look over here, right, traders, now you may be saying that, okay, let me just choose the easiest one, 90% number, 200 points, and that's it. Quickly come out, a lot of wins, I'll get 90% wins, 10% I lose. But then the main question you got to ask yourself is, can a 90% wins override the 10% losses, right? So that's what we mean, does the law of numbers work? Okay. Now, the way to think about it is, you have to think in terms of the what what is the maximum, what is the average loss that it needs to have for it to break even. Okay, so basically it's like 90x minus 10 times what is the nx for it to break even. Then you know that that strategy, for the numbers to work for a 90% probability strategy, you, let's say for example, just for namesake, that means you cannot take more than, let's say, 4 times the profit loss. Okay, that's all it means. Okay, so that's what you got to think about. That is what we talk about in the law of numbers. How does it work? And we have thought about all of this. Of course, you must understand, we've been doing this over 15 years full time, 12 years of collated research, 38 years of team cumulative experience. Actually, that's increased actually to more than 40 years right now, right? And that is why when clients join us, they get all the absolute precision in which we explain things in 1 or 2 lines, and we're able to do that only because over all these years of contemplation and being in the markets. Okay, all right, traders, I guess that's quite a lot for you all to take in and for you to think about as you construct your strategy under the T component, the target component. Very important. I always tell traders, more than the entries, the exits is where you make your realized profit or your loss, and it's very critical. Right, now on the next part, on the 6th part of the 7-part video series, we're going to be taking a look at the RM component. Now, what is the RM component? In fact, it's so critical, just like your T component. We're going to be talking about all that and more in the next part video series. Okay, I guess that's a wrap up. I'm not really getting that many questions. One question that has popped up actually, which is, where can we find out more about all this information? As I said, Master the Markets 2010 on the TradingView channel. Another thing also you can do, traders, is our Trader Starter Pack video series, right? So when you go onto here, this is our 5-day video course that we put together. Very concisely taught in terms of beginner and advanced material as well, and taught to you in a very educational and entertaining way as well. So all that has been done here on our Trader Starter Pack. If you click on that link, you will get to basically this page over here where you can pop in your name, email address, and your phone number if you want to for live trading updates. And then you can start watching the videos. Okay, so that is one question that I've had in terms of the OE and everything. As I mentioned, watch through our 7 streams, 7 steps to consistent trading performance under the live streams. Okay, all right, traders, I guess that's pretty much that from me on this video, on this part 5 out of 7 video series on the strategy construction video series, and combining that with live trading as well. That's all from me, and as we always say, till the next time, stay disciplined, follow your trading plan, and keep trading like a master.